there's no substitute for experience, but I would say anything you want to do, whether it's a business or investing in real estate or stocks or something, know your subject inside and out and challenge your beliefs. Figure out who disagrees with the path you're taking and talk to those people. Find out what's wrong with what you're thinking, and if you can bolster what you believe in the face of their legitimate criticism, more power to you. Don't stick your head in the sand and avoid criticisms of the path you're taking.
You're listening to the Millionaires Unveiled podcast, where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their current portfolio allocation. Now to your hosts, Clark Sheffield and Jace Mattinson.
Alrighty, welcome back to another episode of the Millionaires Unveiled podcast. This is episode number 168. Jace, Happy New Year again. I think we said that last time, but what's going on? Anything new? Ready for 2021?
Yeah, man, ready for 2021. Just getting the year started here. Obviously, January for both of us really is a super busy time, but this year is a little bit more busy than normal. But ready to get back in the swing of things and kind of get rolling with 2021. What about you?
Yeah, since we're both accountants, really, or at least for our day jobs, this is some of the busier time, right? End of year accounting work. So unfortunately, that's what we're getting into here. But yeah, everything going good for me. Looking forward to 2021. I think overall it'll be a good year. Excited for it. Excited for where things are headed with the podcast as well. So yeah, excited for the year. We were just talking, I just came across something today, and this is just a poll I saw on the internet. About 250 people responded to it. And the question posed is, excluding those with pensions, so people that don't have pensions when they retire, how much do you believe you'll need to save in order to retire with a moderate lifestyle? So, and they describe moderate lifestyle, single family home, a couple of cars, 1 or 2 family vacations, etc. And 250 people responded to this question. How much do you think you need in retirement? About 60% of the people that responded said you need between $1 and $2 million. So 30% said $2 million, and about 30% said $1 to $1.5 million. So that means about 60% of the people that respond to this poll think you can retire with about $40,000 to $80,000 if you follow the 4% withdrawal rate on the $1 to $2.5 million, about $40,000 to $80,000 a year in expenses. What do you think about that?
You know, it's interesting. One, I think that number has come up on our podcast multiple times, right? That 2 to 2.5 number, and using the Trinity study, which is the 4% withdrawal rule, although there's some debate about that recently, maybe being closer to 3%. But that number, that 80 grand, is basically where experts and pollsters and a bunch of professionals in the space have said that is the optimal level of happiness, that 75 to 80 grand number. And you and I have had discussions multiple times just for, our lives and whatnot. If you do have everything paid off, say you have a paid for house, you live in a fairly low cost of living area, so your property taxes aren't ridiculous. I think for 2 people without any kids, I mean, that gives you a pretty good life. You figure like, hey, I got paid off cars, transportation. I'm not really driving to and from the office. I don't have to go buy new clothes all the time because quite frankly, I'm not dressing up and doing all these kinds of things, putting wear and tear on clothing. And, to feed 2 people, it's not astronomical, so I think that's probably for depending on what your purpose is and where you want to go. I mean, that's not outrageous to get to that point.
Yeah, I just thought it was interesting. And then on the flip side, about 10% of the people said you could retire with less than $1 million, and 10% people said over $4 million. But the main chunk of people, about $1 million to 2 to 2.5. So that seemed to be the sweet spot, at least in this poll. And anyway, just kind of interesting, about 250 people took that. Just wanted to read a review that we got on iTunes. If you enjoy the show, we appreciate good reviews. It helps us continue to grow the show and get out there. This one is from C-Mac Hap. C-Mac Hap, Jace, you know who that is? I don't know who that is. I am a DR fan, Dave Ramsey fan, and found your podcast via one of the Dave Ramsey Facebook pages. I love getting more of the backstory than what Dave Ramsey does on his Millionaire Theme Hour shows. Nice to hear how people accumulated their wealth, the road they took, and their insights. I do enjoy the fact that you guys ask some of the same questions, but we get way more info as there is way less of a time crunch. Listening to other stories motivates me to work harder to increase my net worth. Thanks for a great product. So thanks for that, CMACAP, and thanks for everybody who tunes in and shares reviews and leaves them on whatever platform you listen to. We really appreciate that. Just as a quick synopsis, last week we had Neil. He was a big multifamily investor. We get into multifamily, how his investments and collections and expenses have been impacted by COVID. He has a current net worth of over $5 million, so that was interesting to hear from him. On today's episode, we have a fun interview with David. He currently works as a police officer. He spent 8 years in the Marines. After the Marines, he went into corporate America and became a police officer after that, and has since started investing in real estate. He also invests in gold and silver. He mentions he doesn't totally trust the markets, but has about $300,000 in market investments. So interesting, fun interview coming up with him. Apologize for some of the background thing. We're trying to edit that out as much as we can. Thanks for tuning in week after week. If you're interested in some multifamily or commercial syndication investments and you're a accredited investor, please feel free to reach out. We'd love to connect. Love to connect with any of our listeners. So feel free to reach out. Our email is millionairesunveiled@gmail.com. Also the same if you'd like to be on the show. So happy New Year to everybody. Thanks for tuning in. Thanks for sticking with us since 2021. This will be about year, Jace, 3.5 of the podcast here, coming up on 170 episodes. This is 168. So here we go. Please help me welcome David to the show.
David, do you want to just give us a little bit about your background and kind of what you're up to now?
Sure. I have spent a lot of time in the Marine Corps, 8 years in the Marine Corps. Got out of that, went into corporate America, where I spent about a decade chasing dollars. Got my butt kicked in the recession. I went from being worth about $600K to negative $200K within about a year. Learned a lot of lessons from that, especially that money didn't make me happy, but I sure liked having it. Since then, I've become a police officer in the Bay Area. Love my job. Gotten further into real estate, shifted from investing in single family to multifamily, and big fan of gold and silver. Don't trust the markets. And the last month or so has been an education in that too.
Yeah, totally. Let's get into that. So what's your net worth today?
I'm at 2.1. When I reached out to you guys a month ago, it was 2.2.
So not too bad. I only lost $100,000. What's the makeup of that?
The breakdown basically is about 1.6 million in equity, specifically 1.564, but let's just go 1.6. I've got about 230K in precious metals, the actual metal, which I store in two different off-site vaults. I don't keep it at home. About 300K or so in stocks, IRAs, my pension fund, etc. The rest is mostly just cash, and then a pretty impressive gun collection, but I didn't really count that.
That's pretty valuable right now, right? So precious metal, is that gold or silver, or what's you got real gold bars sitting in the safe?
Yes, not my safe at home, because I'm not a bank and I'd hate to get hit. Being a police officer, I understand how home invasions work. But specifically 9,300, 9,400 ounces of silver, 40 of gold, 5 of platinum, and then a few odds and ends throughout there. But silver's what I love, and silver's what I think is going to have its day in the sun.
Yeah, you got the whole gamut there. So 1.5, or 1.6, that's equity in real estate?
Correct. 41 units, all in North Florida, Tallahassee, Gainesville, and Daytona is where I invest.
And is that all single family or multifamily?
All multis. I did single family from about 2004 on, sold my last one. God, I think it was 2017. I bought a bunch in 2004, held them through the crash in Vegas, bought some foreclosures, and then recently transitioned over to multifamily starting in 2017, and acquired 41 since then, 41 units.
Wow. So what's kind of the breakup of those units? Is it like a 10-plex and a 20-plex and then a couple smaller ones, or you got a bunch of 4-plexes, or what's kind of the breakup there?
In Tallahassee, I've got a 16-unit complex and a smaller 6-unit that's kind of a triplex with some single families all on the same plot. Functions as a 6-unit though. An 8-plex in Gainesville, and then in Daytona, a former motel that's now kind of like 11 units, a couple little cottages and duplexes all smashed together. It's a weird looking property, but it cash flows nice.
Awesome. And then you've got a little bit in the market. Is that in index funds, individual stocks, bonds?
Predominantly gold miners, about 85% mining companies.
Wow. And have you always had that allocation?
No. I've only recently gotten back into the market. Among many mistakes I've made, I wasn't in the S&P from about 2010 on, and kicked myself for it. But hindsight's always 20/20. Only in the last 2 years or so have I started getting back into the miners a little bit, based on my investment philosophy.
Interesting. And what is kind of the investment philosophy that you've got now?
Pretty contrarian. I think our economy has really been, the last 10 years, been propped up with, Fed paper. We've been doing emergency operations, interest rates pushing down for the last 10 years. And when they tried to bring it back, if you recall, we had a couple interest rate increases in late 2018. The market immediately dropped the Dow down to 22,000. It kind of made me realize that the market is dependent upon the Fed feeding it with new money and keeping interest rates low. The corollary to that is, I'm a cop in the Bay Area. I have a CalPERS pension plan. These pension plans rely upon fixed income assets to stay afloat, and 1%, 0.5% interest rates just demolish them. I think you're seeing that particularly in Illinois right now. They've got all kinds of budgetary and pension problems.
Yeah, so it's so interesting, right? Because when the Fed dropped rates now twice, and I remember after the initial drop, I was thinking, why are they dropping it, right? Because it hadn't really dropped. The market hadn't crashed that much, right? I think it was down 10% or something, right? 8% maybe. And that now they've really dropped it again, right? Now it's close to zero. And I don't know. I worry that when the market keeps going down, what's the Fed going to do now? What's the next move, right?
And I'm not smart enough to know that either. I mean, I do know they're in many ways out of ammunition, but the next thing is, helicopter money, which they're talking about right now, mailing everybody checks. And maybe that's a function of the virus. Maybe not. I mean, we've done it in the past previously. But the one thing I'm certain of is unpayable debts won't be paid. And we're awash in debts in the world today. And if something can't go on forever, it's going to eventually stop. As we approach zero, all kinds of funky stuff happens. I mean, do you want to invest your money at negative 50 basis points, negative 100 basis points? I don't. What happens then? It's these third and fourth order occurrences that make me worry about what we have now, which is essentially a centrally planned economy.
Right. So if somebody, Dave, just back up a little bit. If somebody wants to go buy gold or silver, where do they go?
I like to go to find a good broker dealer. Predominantly when I'm buying the physical stuff, I will go to comparesilverprices.com. They've got about 6 or 7 different dealers up there. You look for one with low premium. You don't want to buy mystics. You don't want to buy stuff that's have got an ounce of silver, an ounce of gold, say it's worth $1,300, but this one is in really good condition and a good year and rare, so I'm going to charge you $2,000 for it. I wouldn't buy that kind of stuff. I would like to buy it close enough to melt value, something at like maybe 1.5% VIG. 1.5% premium over the melt value. You want someone who's going to be reliable, and all the ones on those sites tend to be. Let me think. And then we've all got personal preferences. I mean, for myself, I stick with 100-ounce silver bars and then what's called junk silver, pre-1964 federal currency. Our quarters, dimes, nickels all used to have silver in them, and then they took that out in 64. The reason I like that is it's scarce. They're never minting any more of it. And you can kind of get part of the play for me is, along with owning that stuff, is eventually when people come back to it, as they did in 2009, 2011, and previous years, you can get a better premium for it. Premiums on this stuff that I buy about 2 months ago was about 2%. Junk silver was about 2% over melt value. Today, it's about 45% over melt value. You can't even find the stuff. Everybody's out of it. That was a long-winded answer to your question. I'm sorry.
No. It's interesting because I wouldn't even know where to look. I'm sure a lot of listeners wouldn't. I'd probably just go in and do a Google search, right? Like buy gold and buy silver. So I was just kind of curious from an insider like you where that would be.
Your local coin shop is good too to talk to people, that kind of thing. I mean, but there's also a lot of sharks out there looking to steal your money. And in any industry, God, I'm in real estate. I mean, there's plenty of that too. But yeah, I would recommend any broker on comparesilverprices.com or comparegoldprices.com. Never had a bad experience with any of them, and really good customer service, and you get what you pay for. And it's been a good experience for me.
So they just ship it to you once you buy it? Is that how it works?
Correct. You buy it, they'll ship it to you, FedEx or UPS, requiring a signature, an adult to sign for it, and then you pop it open, and you'll see within their own company. One I just ordered some bags from. They've got tags on it showing a cam count on. They've obviously have their own internal systems where they'll check it via camera, check it via weight, make sure they're sending you the right thing. There's no internal fraud, so that when you receive something, you can be assured that they know what they're sending you, and there's no chance of anything wrong occurring.
Gotcha. So let's jump into your story here a little bit, Dave, because it's super interesting, right? And obviously we haven't heard a lot about it, just briefly, but talk about, you were in Vegas, right? From 2006 to 2009-ish, building houses?
2004 to 2000, let me think, 2000. Well, I was in Vegas from 2004 to 2011. I was building houses until about 2008 when the economy blew up.
Okay. And was that your own business? Were you buying?
No. I was a general contractor for Centex Homes, a single-family home builder. They were acquired by Pulte Homes, which you guys might be familiar with, following the crash.
Gotcha. And so you had a net worth, you said about $600,000 in 2006 and then negative $200 in 2009. So what was that invested in at the time?
Right about there. Yeah, I had a lot of equity. I was buying single-family houses and renting them out, along with a stock portfolio. I couldn't give you the exact composition, but I'll tell you, when things crashed, I had 4 homes, each with about $100K, maybe a little more of equity each, and then stocks as well, a significant amount there, so about another $200K there. So that was basically the makeup, though: 4 homes and a bunch of index funds.
So the 4 houses, I assume one was your primary residence, the other 3 were rentals. Is that right?
I'm sorry, I should say 5 then. Yeah, 1 primary residence and
4 rentals. Gotcha. And so what happened? Did you lose the homes? Were you not able to rent them out?
I did not. I was always able to rent them out. They were worth. They were all in the same neighborhood. The neighborhood I was building, actually, which was kind of fun. I got to put my own personal touch on my rentals. At the peak, they were about $350. At the low point, they were selling for $120. I always was able to rent them out, cover the mortgage, plus maybe $100 or so. Back in those days, people were very, very exuberant about the market. I had so many people advising me to get an interest-only loan, get those adjustables, put as much money in your pocket. I always stuck with 30-year fixed, never took money out of the places, just because I was naturally a little bit conservative, not envisioning anything like what occurring. But then when things did go south, being conservative with my finances paid off. Never had a bankruptcy or a foreclosure. Scraped along for a while, and then following the crash, started buying foreclosures, fixing them up and renting them, and that kind of evened out the problems I was having, the difficulties.
So how'd you get to negative 200,000 net worth if you didn't lose these properties? What was the negative?
When you buy them for 240 and then they go down to 120, and your stocks go from about 200 to 60, somewhere around there.
Yeah. So you just lost equity.
But I was. The note was about, the note would be, and some were no money down because that was allowed at that time. But yeah, all of them were underwater. So 5 houses underwater.
Gotcha. So netted, okay, you owed more than they were worth.
Yes.
I gotcha. Okay, and then what happened? Did you hold on to them and sell them? Do you still have them?
Held on to them. Sold them first. Well, actually, those that were underwater, I started selling in 2016 and 2017. They had come back to anywhere from 60 to 100 more than I had paid for them, but also there was mortgage pay down over that decade, which helped out a lot. So there was really only one of those 5 when I sold that I actually owed money on. I think it was about $10K after all expenses and everything else like that. All the rest, after a decade of renting them out and paying them off, eventually made some money for me.
Wow. So pretty amazing start, right? 8 years in the Marine Corps, 10 years in corporate. I assume this was part of that corporate stint. Is that right?
Very much so. Yeah.
And then you started rehabbing foreclosures. You changed locations?
I stayed right there in Vegas. I couldn't leave without losing the houses, and I just didn't want to throw in the towel. I got a job with another company, not building houses, but something slightly different, supply line type stuff, nothing too interesting. But it kept me in Vegas where I could manage my own properties. I still had some capital, and I said, well, I can either chug along with these or, double down, to pardon the term. And stuff was going for just a song. I mean, places that would rent for $1,250 were going for about $90 back then. So I would, I'd pick those up, get another 30-year loan, and sometimes have really good terms. Like they would give me a repair allocation of maybe $10K or more off the price, fix the places up. And I mean, you guys can do the math. You buy a place for $90, rent it for $1,250, you'll make money all day.
Yeah, it's like a 20% cash on cash if you pay all cash-ish, right?
It was good times in 2009.
Wow. So you just try and buy as much as you could?
Stupidly, I didn't. I don't know if I can really tell you guys how battle scarred I was for going through 2008 and just being just totally wrecked with, oh my God. And we kind of, 2009, 2010, I mean, my mindset wasn't buy all I can. It was like, oh my God, what's the next step down? Are we going to recover from this?
Totally.
I didn't envision the Fed doing all they did to rescue things. I didn't think stimulus would be as successful as it was. I'm glad it was. But no, the same mindset that made me want to have very conservative loans at the time kept me from going all in 2009, 2010, even 2011. And I'm kind of seeing some of the same things today, which keeps me doing the things I'm doing today. Hindsight is 2020, but I don't know, man. I feel like we're on shaky.
Yeah, but I mean, it's so much easier for me to sit here and say, oh, you go all in 2009, right? But you're in it from 2006 to 2011, right? You lose it. You have 5 homes yourself, right? I mean, totally understandable that you sit there and say, my gosh, where are we going to go from here, right? How much farther down are we going to go?
Yep.
So, okay. So then now you've moved to California and you're starting to buy these multifamily properties in Florida. So how did that come to be?
I kicked myself. I wish I'd really thought about apartments and multifamily prior to. I don't remember what the actual epiphany for going into multifamily. I think around 2015 or so. I've always been into education. I've always loved real estate and reading and thinking. And there's a lot online a lot of resources. Hit on a couple guys that gave a lot of free content. A guy named Rod Cleef, and then also there's an outfit called Jake and Gino. Both have paid subscriptions and mentorship, but both also provide free pages of info on their sites that you can look into, talking about why multifamily is far superior. And I agreed. I read through it all. I was like, my gosh, why didn't I jump into this sooner? I mean, everything from economies of scale to the fact that you're buying based on a cash flow, based on the net operating income versus comps, like you'll find with the 1 to 4 units, just woke me up. That's when I started the transition. I began selling off the houses when I could that had some money to them, and then shifting that equity into multifamily. North Florida specifically, I was trying to figure out where to go. Demographics look great. Employment growth looked great. People were leaving the Northeast, the Rust Belt, and droves. I thought I was going to be doing Pittsburgh and Cleveland for a while and really investigated those markets hard, but just decided I'd rather pay more for a place that I felt would have positive net growth over time. So that's how I ended up both in multifamily and in North Florida.
Which, my gosh, it has, right? Florida over the last couple of years, crazy.
Agreed.
So, now, I think something, Dave, that we gotta mention here that's pretty unique to you in owning these properties. I mean, obviously, about as far as you can possibly be in the country, right, from where you live to where you own. But you buy all these sight unseen, right?
Yes.
So what are you thinking? How come you don't go down there and look at them?
It's the age of the internet. I'm going to be, I can get a walkthrough via FaceTime. I'm going to hire an inspector before I buy anything to go through it, rafter to floorboard to let me know the case of things. I have 3 different ways to verify the cash flows that the seller's representing to me are accurate. I have a ton of online resources where I can, make sure I like the neighborhood, make sure I like this, make sure I like that before buying. It really isn't quite that scary. For some reason, I wasn't too concerned about it, having done all the due diligence I did. And then also finding a great broker, someone who you trust, is a huge part of that. Shout out to Bo Berry in Gainesville.
So how'd you find your broker? How'd you find him?
I was spending about a year trying to meet people, talk to people, go to LoopNet find the top 5 listing brokers in areas, reach out to them and chat. It's a tough It's a tough place to break into if you don't have a property to your name. A lot of people won't take you seriously or take the time. I actually don't know how I ended up on Bo's mailing list, but he sent me an email, just a marketing email one time. I replied back with my thoughts on the market and how I was willing to be patient and da-da-da. He came right back and said, hey, look, I agree with a lot of what you're saying, but I just found this one unit, or rather the 16 unit. It might be what you're interested in, and kicked it over to me. 16 unit in Tallahassee for it was listed for $680. The numbers looked good. I'd seen so many BS pro formas. I mean, listing agents, they try to make the selling property look as best they can. Some of them that you can tell they're lies. Some are just exaggerations. Others are accurate. This one, just looking at the numbers, I could tell was accurate. It's hard to quantify how that is totally, but after you look at about 100, 200, you start feeling for what is legit and what isn't. Emailed back, I was interested, and we were in contract within a few days, and that started the ball rolling.
So 680,000 divided by 16 units, about 42.5 a unit. What class is this? C?
I'd call it a C. Yeah, I'd call it a C, maybe even C plus. But yeah.
And you try and take it to a B, or you kind of just cash flow it at a CC plus?
The units were under rented. They were currently at about 600 average when the seller was selling it. Thanks to Bo's counsel and then some of my own thoughts, I realized I could do some flooring, do some granite. Market rents were at about 700, add a washer dryer, and it's amazing. People will pay another $50 a month for a washer dryer. They had washer dryer hookups. So I had, by investing about, let me think again really quick, about $5,000 per unit, I could raise rents to about $750. And currently, rents are averaging about $790 at that complex. But yeah, it was a very good per unit cost. And then it looked like with some small investments, I could get the rents up to where they needed to be. It was a value add, if you will.
Yeah, good for you. And then what's your strategy? Do you refinance out of these multifamily properties, or do you just kind of keep it with low leverage and cash flow it?
That particular one I did refi out of. I was on a 15-year when I bought it at a local lender. Refied out with Freddie Mac, small balance. About a year and a half later, and this was a big win. The appraisal at that point was about 1.15. I refied at 791, so I got all my original money out. So right now I have zero invested in the property, and cash flow is about we'll call it conservatively $3.5K a month.
Wow, that's amazing. I was going to say Freddie has a minimum, don't they, on either loan amount or value, right? Isn't it?
750 loan balance. Yeah.
So you were right there.
By 41K.
Wow, good for you. These other multifamily properties you have, has it been as positive of an experience for you?
This has been the winner. They've all been positive. They're all doing good, but this was definitely my first one was a home run, in my opinion. For the size of it. The others have all been good in their own way, but this was the biggest value add. The others, this was the best value add. Let's just leave it at that. Yeah.
So, David, you've built up this great net worth. You've had all the ups and downs of the real estate. Where do you go from here?
Where do I go? My goal is cash flow, not so much net worth. It was actually, I was for a commercial loan, I was calculating net worth one time, and I was like, holy crap, I'm worth 1.6. It never even occurred to me to check it. I was really just focused on monthly cash flow. So when I can get to $20K a month coming in, which will be a little more than double where I'm at now, reliably understanding that things slingshot, then it'll be time for a change, I think. I love my job. I love what I do. I've got no real urge to leave just yet. So for right now, I'm 42 years old. I intend to be at the job for about 8 more years. Hopefully the pension is still there for me. Math says it won't be, but we'll see. And then as far as the real estate, I think I'd like to trade up some of the properties, the heavy lifting rehab I've got going on in Daytona right now. I'd like to sell that once it's finished up and move into nicer properties where I don't need to worry so much about whether the rent checks will be there. So let's say that's a goal. 20K a month coming in with B- assets or better. Happy family life, happy kids.
How long do you think it'll take you to get there?
It all depends. Right now, I'm very cash poor, I would say. I got cash flow coming in, but I'm spending a lot on that rehab I told you about in Daytona. My real hope is that if the gold silver ratio goes back to where it's supposed to be, my hope is to trade the metal for a rather large building in the future. So it really all depends on the market. I thought it would occur a lot sooner than it had than now. It really all depends on what's going to happen with the current environment we're in. There's a lot of uncertainty out there. And most of what I've done the last decade is trying to put some kind of certainty / insurance behind me. Yeah, no clear answer on that, man. I'm just trying to stay above board right now.
No, I totally hear you. And there's a lot of elements that go into and factors that go into getting there, right? So it's hard to technically predict, but I was just curious if you thought that maybe you'd get there in 5 or 10 years or 15 or whatever it might take. Oh,
I'm sorry. Well, let me be more clear for you. I think within 5 years, absolutely, I can double what I got. It's all about finding the right. With regard the property I have in Tallahassee, the 16 unit. Shoot, you find 2 more of those, and I'm just about there. Or even better, I find some investor money. This is all me. I don't really want to take on a bunch of investors. There's all these guys nowadays syndicators who, bring in 20, 40, 50 people. It's not really my interest. I like to keep it all me and me to be the primary decision maker. So that does kind of limit my growth. I would say within 5 years, without any issue, I'll be where I want to be, based on the fact that the last 3 have been so successful. But you know what? I reapprise that goal weekly.
Yeah, no, totally. And that was kind of my next question. So no partners at all to do this, and no syndication or anything?
Not for me. I don't think I have the mindset. I definitely don't want to. I don't mind risking my money with property sight unseen or trying this or doing that. Taking on other people's money to me is a very, very, very significant responsibility, and one that at this point I'm not really interested in embracing.
Yeah, I agree with you. I think it adds a totally different element to it, right? And decision making being the number one thing that you give up, right? If you invest in a syndication.
Yeah, that being said, if things go south and we have a rough couple years and cap rates, which are so capitalization rates, which are so compressed right now, pop back up to the mean they've been throughout the years, I might be more willing to revisit that, But there's so many people buying stuff at 4.5 cap, thinking they're going to exit at 3.5, and I just don't want to play that game. It goes back to, I remember the exuberance of 2007, 2006 in Vegas, and I just don't want to play with fire. Things can overwhelm you very quickly.
Yeah, total tangent here. Just while we're talking, I went to this comparesilverprices.com. Mm-hmm. And they got a thing at the top. Well, I clicked on it, JM Bullion. Maybe that's a seller or whatever. But they say, due to extreme order volumes, please expect shipping delays of 15 plus business days.
Yep, JM's a good company.
So there you go. Everybody's going to buy silver now that the markets are down.
The fun thing is, when you look at the premiums, the price a few weeks ago was I think about 17.5. It's been beaten down to 12. But you're still going to pay about 17.5 an ounce based on the premiums and the low supply. There's always in the community, the precious metal investing community, there's always talk about paper manipulation and the paper versus the physical. The physical market is so small compared to the paper market of billions and billions of dollars out there. It's a sore spot.
Yeah. So Dave, you seem like a big real estate guy. Has it always been this way?
No, I didn't discover real estate until, I was in the Marine Corps. I was in Atlantic City for a weekend with some friends. We were playing blackjack, didn't know what the heck we were doing, having a great time. Lady sits down next to me, and I'm playing the little red $5 chips, and she's dropping greens and blacks. And, of course, she's my hero. I'm like, wow, look at you. We get to talking a little bit, and while she was there, her husband came up next to her and was like, hey, some guy just he said he needed to make $1,000 for his mortgage, so he put $500 on black at roulette and lost. She goes, oh, we should go make an offer on his house. And I'm like, whoa, you can do that? But she and I start talking, and she's like, yeah, we invest in real estate, And at that time, my knowledge was so light, I just understood that she bought places cheap and made money off them. But that day, after that weekend, I went and ordered a book, started reading, started educating. And then when I got out of the Marine Corps in 2004, got to Vegas and started trying to implement what I had learned, or what I thought I'd learned.
I got to tell you, man, when I asked that question, that is not the direction of the answer I was expecting.
Everybody's got, all good things happen around a blackjack table or a bar.
Yeah. So you have, you married? Any kids?
I am. I'm married. Met my wife in Vegas, and 3 beautiful daughters, 7, 5, and 2. Yeah, they are the best thing on earth. I often tell people, I mean, we talk among friends, everybody's trying to do their thing. And I tell people, man, family, health, wealth, in that order. And I try to make sure that's in my mind. I mean, I've been broke. Right now I'm doing pretty good. That could change in 5 years, but as long as I got the first 2, I'll be okay.
Yeah, good for you. Good for you. Congrats on the success, obviously. So are you starting to teach them about money? Any interest yet? Still really young, I know.
Yeah, the 7-year-old is definitely not interested. I can tell my 5-year-old though will definitely want to be an entrepreneur. I can see walking 4plexes with her, or taking her out, and she'll be very interested. She'll either do that or be a fighter pilot. The 2-year-old can't tell just yet. We're figuring it out. But I will try from a very young age to talk to them about interest, about compound interest, about saving money, and try to impart some lessons. 2 of my closest friends who are cops also invest in real estate. One guy, he's kind of my hero. He's got about 100 units. And we trade information all the time, chatting. The other guy's got a few. He's just getting started out in Indiana, but they all invest at a distance. And we share all kinds of information. They spend a lot of time doing option trading as well on the markets. And I can tell when they're having an up day or a down day. And that's a pool I don't want to dip into.
So how do you get, I mean, look, admittedly, I've been nervous myself, and Jace, I think you are too, about investing in an area outside of our primary residence, or somewhere where, we can drive to it, right? At least it's 4 or 5 hours away or something. How have you gotten over that? Or how have other people? What's the best way?
I got to say, I mean, with that particular one, it's really never been too much of a holdup. I got to ask myself, it's like, do I need to reach out and touch it to feel good? I mean, do I need to confirm it's there? Do I need to go look at the specific construction to make sure it's not going to fall down? I mean, I've got to ask myself, what's my fear of not reaching out and touching the property that I'm going to buy? And I've asked those questions and answered them to myself. And in the end, come to the conclusion that, I mean, I'm going to hire the right people to look at them. I'm dealing with trusted individuals. My property management company in Tallahassee, I mean, my God, we're like brothers. I've gone out there a couple of times. We've drank plenty of beers together. We really see eye to eye. So when my broker brings me something in Tally, I can ask them their opinion and know I'm going to get the unequivocal truth. Gainesville, again, I've seen my broker a couple times. We've hung out. I'm fully confident. So let me summarize. If you have good people to double check, you're not gonna worry too much. For me, that's been true. I've got a construction guy in Daytona I'm working with right now, who I'm going to partner with probably on the next project. He and I have gotten a great relationship over the last few months. He's honest. He's a good dude. I feel very confident. I think we're going to do business together in the future. So it's all about finding those decent people, surrounding yourself with them, and trusting their opinion, trusting their word.
Yeah. So maybe that's the initial thing that concerns me, right? Or others, or I don't know, just kind of thinking out loud here is
Sure.
how do I find that property management company that I know I can trust, right? What if I have issues with them? And I mean, it's word of mouth, but okay, if I'm going to go invest in a Cleveland or a Tallahassee, right? And I don't know anybody in that area, how do I find that good property management company? How do I find the good banker? How do I find the good broker? Do I need repair people? Do I need a lawyer, right? Like, how do I find those people when I'm not living there?
I mean, maybe I take it for granted being my job, but part of what I do is sit across the table from somebody and talk to them for hours at a time, typically about crimes. But I'm interviewing, I'm looking at body language, I'm talking, I'm listening for deception. I'm trying to figure out what this person knows that they're not telling me. Maybe those skills kind of transfer over to what I'm doing here when I talk to someone on the phone or go meet them in person. Gut instinct's a big thing, I mean, and I've been wrong before. Absolutely. But you talk to someone, you ask them some questions, you give them some chances to say what's on their mind, and you start to develop a profile of them. Is this a person I trust? Is this person being honest with me? Is this person telling me what I want to hear? I think I've got a guy I dealt with in Daytona with sales, and he said all the right things, but every time he spoke, I felt like a snake was crawling on my back. Just the feeling. I won't be doing anything with him that requires a level of trust. And maybe I'm wrong on that, but I think I'll be better off for it. So I've got to say, if you want to say you want to find a property manager, call the top 5, call the top 10, and just talk with them, interview. Have some questions about some what ifs, give them some scenarios and see what happens. And the ones that are willing to talk to you, the ones that sound as though they are legit, take a chance. And if you're wrong, you have a contract that allows you to fire.
Mm-hmm. Mm-hmm. How much do you pay? What do they charge?
I am 10% across the board. I pay half a month's rent for finding a new one. And then there's some small details between a couple of different property managers. One I split late fees with. Another one I pay a bonus for releasing. Another I don't. But generally speaking, 10%, and then half a month's rent for finding new tenants.
And the 10% is uncollected or billed?
Collected.
Collected, right? Okay,
Yeah,
gotcha. And
absolutely.
then if there's a legal case where someone doesn't pay and there has to be an eviction process, do they handle that for you and then just charge you separately, or?
They handle it entirely. We've got the only place I've had to do evictions actually is Tallahassee, which is great. There's a local legal office who I've done some business with. All my closings through there. They'll handle the evictions as well, start to finish. The management company just has to file with them. It's expensive. It's about $600, but luckily in Florida, part of the reason I chose Florida, it's a very landlord-friendly state. I can get people out in about 3 weeks.
Yeah, unlike here in New York, I tell you.
California.
Yeah, California too. Texas is a good place, right? So, Dave, just looking back at your whole scenario here and this whole investing journey so far, obviously you have a lot in front of you and a lot of successes to come, but what are the couple things that maybe made you a millionaire? Was it your work ethic? Was it being able to kind of pivot when you saw an opportunity? It sounds like that. Was it being able to find these good real estate opportunities? Was it working hard? Is there a couple things that you can point to and say, hey, that's really what's driven my success?
I'm going to not say work ethic. People who know me would probably say that I work really hard. In my mind, I'm very lazy. I try to find the easiest way to get things done. It doesn't mean I don't do things, but I'm always looking for the simplest path. If there's 27 steps, I want to find a way to do it in 12 steps without compromising integrity or anything else like that. Absolutely. I'm going to say education. I'm going to say that I felt the confidence I had to do what I did because I had read, I believe, 50 books leading up to taking action. I had talked to a lot of people. I tried to make sure I knew what I was talking about. There's no substitute for experience, but I would say anything you want to do, whether it's a business or investing in real estate or stocks or something, know your subject inside and out and challenge your beliefs. Figure out who disagrees with the path you're taking and talk to those people. Find out what's wrong with what you're thinking, and if you can bolster what you believe in the face of their legitimate criticism, more power to you. Don't stick your head in the sand and avoid criticisms of the path you're taking. You mentioned discussing money among cops a little while ago, and the people within our department who know what me and a couple friends do will jokingly call us slumlords and kind of sneer a little bit and that sort of thing. But it doesn't shake us or anything. It's really just fox and the sour grapes to some degree.
Yeah, I really like what you said about finding people who disagree with you, right? I mentioned this in actually an interview we did earlier today too, but Ray Dalio's book Principles, I don't know if you've heard about it, but it's
I know Ray Dalio.
Yeah. But in his, he talks about that, right? Surrounding yourself with people who will disagree with you and kind of poke holes where you're missing something. And he said that provides tremendous value because then you can just start listening from a different dimension, something that you haven't thought of, right? And ultimately, you'll make the final decision, but getting that input from varying sources can provide you tremendous benefit.
So important. When I was in the Marine Corps, I'd bring in the corporal or the lance corporal who was on the verge of getting out, who had nothing to lose, sit him down in front of me and say, okay, tell me what you don't like about the platoon or the company. Let's hear it. And I got so much valuable feedback that way, just from listening to people who might not be 100% thrilled with everything I was doing. Sure.
So just some rapid fire questions here, Dave, to close. What's been the most expensive car you've ever purchased?
I always bought used cars until I got married. My wife insists on nicer cars. So that would be our Honda Pilot. That was $32,000.
Okay. What about most expensive meal out that you've paid for personally?
Probably low 200s. I think would be at Fleming's Steakhouse, low 200s.
Okay. In your life journey, what was worth the money as you were on this path? Was it cars, good vacations, experiences, etc.?
What was worth the money? My automatic pool cleaner. That was worth the money. I dropped that baby in, plugged it in, and that pool was clean in 3 hours. Cost me $550, and the wife was like, "No way!" And it has paid for itself every day. I love that thing.
Okay. Have you ever used a financial advisor?
I never have. I never have, and I really should, but I got a little bit of a bias towards financial advisors.
Mm-hmm. Okay. How old were you when you became a millionaire?
Well, I didn't realize I was a millionaire until I was worth about 1.6, and that was about 2 years ago. So let's just say 40 minus a year. We'll say 39 safely.
Okay, that's young. Good for you. As much as you're comfortable sharing here, your range of household income through your working life.
Range, God, when I first started making money, I was making about $32K a year. Last year, I netted just over 200. Excuse me,
Okay.
netted. Last year, my W-2 income was just over 200.
Gross. Gotcha. Okay. And then household spending. What do you guys spend a year?
What we do is I don't keep a budget. I always subscribe to the pay myself first kind of philosophy where I take a certain amount out and I don't really track spending. I'll tell you that of my take home, I make sure I put 20K, or rather 20K. Yeah, I wish 20% away, and then we spend all the rest. So the math on that would indicate, assuming no taxes, spending of 160. Let's just say of all my spendable income, we spend 80% of it. We save 20.
Okay. And then does your wife work or does she stay at home?
She's a homemaker. She teaches some classes at the local fitness club, but only about 5 hours a week just to get out of the house.
Okay. Gotcha. And then any books or tech tools or websites, anything that's been beneficial to you, anything that you can recommend?
The Richest Man in Babylon is my favorite finance book. I like Kiyosaki, some of his earlier stuff. I've never subscribed to like the Think and Grow Rich or the mindset stuff. I always prefer the nuts and bolts kind of things when it comes to reading. Yeah, for me, both The Richest Man in Babylon and maybe The 1 Minute Manager, both are books that I always revisit and go back to.
Okay. And then did you have any debt at all in your life?
I have a ton of mortgage debt, man.
Yeah, I guess that. Yeah, I'm thinking student loans or cars or.
Car debt. I've had some of that in the past. Student loans, never. I was fortunate enough. Mom took care of it. It was a state school though, so it wasn't too bad. Credit card debt. Yeah, I don't carry a balance. I use cashback cards and pay them off every month. Yeah, no significant debt beyond mortgage debt.
Okay, and then the one piece here of your story, Dave, that we're not really talking about is your pension, right?
Correct.
What's that? Just real quick here. How much can you expect to get from that?
Assuming it's all good, I get the term in California is 3 at 50, 3% for every year you work, paid out at 50 years. So if I leave at 50, it'll be about 45% of my net pay. I'm anticipating about 80K a year coming off that pension starting at age 50.
So 3% a year for your highest salary? Is that how that works?
Meaning every year I work. So let's just say if I worked for 10 years, I could expect 30% of my highest salary. I'll put in about 15 to 16 years by the time I retire at 50, indicating 45 or 48%. So 80 is just a rough estimate based on where I expect my salary to be at that point.
And you get that for how long? The rest of your life?
Rest of your life, yeah.
Wow. I mean, you could live off of that, man.
You certainly could. But, we've alluded to this earlier, man. Math indicates that any listeners interested, Google pension debt bomb and just read.
Yeah. Well, if it doesn't bomb, we'll have you back on when you're worth $5 million. How about that?
I'll revisit it. Honestly, man, all these things I've said, I hope I'm wrong. Because life's a lot easier when crazy stuff's not happening, as we all see right now.
Yeah. So just in closing here, Dave, anything we didn't touch on, any, advice you would give to somebody who's maybe starting their career as a police officer or something in the public sector, or any mistakes that you've made that you would avoid against?
Man, millionaire advice and cop advice are two very different things. For cop advice, train hard, stay fit, be nice to everybody you meet, but have a plan to arrest them. Millionaire advice, read. Talk to people and challenge your beliefs. And honestly, as your show shows, there's a whole lot of different paths that people take. Part of the reason I love it, don't restrict yourself. Understand there's multiple ways to go. I mean, honestly, I look up to small business owners. I'm like, how do you guys do it? But that's a really good path to make money too, assuming your business is successful. Always impressed with those guys.
Yeah. Awesome. Well, hey, thanks, Dave. Thanks for coming on. Really appreciate it. Thanks for sharing your story and being so open with it. So again, everybody, that's Dave, net worth of over 2 million, 2.2-ish to be exact. Thanks for coming on tonight.
My pleasure, guys. Thanks for having me.
Thanks, David.
Thanks for listening to the Millionaires Unveiled podcast with Clark Sheffield and Chase Mantenson. For more stories, investment opportunities, and information, check out our website at millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.